Jeremiah here with Patriot Holdings. In this video, I'm going to dive into how we bought this storage facility in Western Massachusetts, turned it around, and achieved such strong returns. Most investors overlook small storage facilities, but in specific markets, you can really amplify your returns by executing on a solid business plan. If there's true value to be added and you know how to add that value, you can get massive returns, and I'm going to outline it in this video. And then how I transformed a seemingly small asset in the middle of nowhere and turned it into a very profitable win for Patriot Fund II. In the deal breakdown, let's go over the price, terms, and timeline. Every deal has these three key components. The price that I acquired this facility for was $1 million in August of 2022. This was at relatively the peak of the market, but I'll share with you how we found the deal and got it at such a good price. Next is the terms. It was an all-cash deal, 60 days, closed relatively quickly. I got a regional bank loan with a Western Massachusetts bank that I worked with before. Okay, why did I buy it? Well, the market overview. It's in a kind of rural town in Western Massachusetts, but you got to look at the location, supply, and demand. There was no real competition in the area for any other storage. It was located off a busy road. It was a major highway going north and south. There was other retailers up and down that road, like Dunkin' Donuts. It got a high level of residential traffic. When I evaluated the market, because there was a lack of supply, I knew we could raise rents. The rents for a 10 by 10 unit were only $100 when I acquired the facility, and now as of the time we're closing the deal, 2.5 years later, the 10 by 10 rents are $150 now, and on the indoor units, they're $189. So there was a huge rent increase, which drove the value. Next, I look at the asset. So the asset had a lot of deferred maintenance, but it wasn't enough maintenance that it was difficult for us to execute on. Broken doors, broken door springs, a little bit of paint, some of the hallways were damaged, but the roof was in great shape, the parking lot was in great shape. So we went in and just made these simple repairs, plus adding lighting, cameras, better signage, and fencing. These were simple improvements that are relatively affordable, but they changed the whole aesthetic appeal of the property, and therefore we were able to command the higher rents. Next, the seller situation. The most important thing to focus on when we're acquiring an asset is motivation from the seller. They wanted to retire. They were mom and pop owners. They had it for years. They didn't want to put money back in the facility, and they didn't care about Google ads or marketing. So I knew there was an opportunity there to acquire it at a fair price because the rents were so low. At the $1 million price, it was still paying a premium. It didn't really cash flow upon acquisition, but that potential upside was the key to finding the right deal here. And the way we found it was off market. This takes time and energy. I have a team of 5 sales guys. I started my career cold calling and prospecting, reaching directly out to owners, calling them on the phone, building a relationship. Hey, we're interested in buying your facility. We have other facilities in Massachusetts. If you ever consider selling, please keep us in mind. And over time, this warmed the seller up, and we were able to lock in a good price at a quick closing period, and they trusted us, and we executed and got the deal done, and they were able to retire, and it was a win-win for everybody. And then the last piece was the marketing. I used a MASM strategy, MASM. So the marketing was poor. They had no presence online, nothing. So I knew that was going to be able to allow us to get more traffic in the facility, get out a lot of the delinquent payers, and there were a lot of them in there, and then get good quality paying tenants to drive those rents up. So let's look at the numbers. The purchase price was $1 million. The sale price was $1.8 million. So we created $800,000 of value. We had roughly $180,000 of closing costs and improvements that we made to the site. So the net profits to the fund was $610,000. So what were the investor returns? The equity multiple was 2.94, meaning for every $100,000 we invested in this asset, we generated $294,000 of total return of capital and profits. What was our average return on this asset in the fund? 57%. This is an excellent return. This is annualized. So over the 30 months of ownership, we averaged a 57% return to the fund. This is impressive. I want to do all the deals like this. So the total equity or the down payment we made in the property was $315,000, and the total distributions with cash flows totaled out to be $925,000 of profit. This was the sale of the asset and all the cash flow along the way. This is what equated out to be the 2.94 equity multiple. That is the total return on the investment. So in closing, this is the Patriot way. We add value through our own management system and making improvements on the site. The key to Patriot success is knowing what markets to invest in, building relationships with sellers, having the management system already in place, and having that market knowledge, knowing where there's undersupplied opportunities and lots of demand. This is why I created the Patriot Funds. We want to give inside access to off-market deals to limited partners or passive investors that are interested in investing in self-storage, but they don't want to do all the work of finding the deal, funding the deal, signing recourse on the debt for the deal, and ultimately having to deal with all the tenants to manage the deal. This was an outstanding success. We're going to find more of them. I'm happy for our Patriot Fund II investors. Check out these videos if you want to learn more about why we do deals, how we do deals, and ultimately how we transform properties and generate such high profits. Thanks.